Baby, this market is taking us to the freaking moon and back, and I'm going to explain to you what you should be doing, how you keep your sensibility, your sanity in a macro environment where inflation is high, interest rates are pausing and still going up here in Canada. Well, we're going to make fun of a clown, Jeremy, the financial educator, that I think would turn your brain into a lemming and throw you off a cliff because he's just been saying shit that makes no damn sense. So I'm sorry, I got to throw him under the bus here. We're going to make a little fun of him as we review the Qs, the S&P 500. We're going to be talking about, of course, the Canadian markets as well. And you asked me penny stocks. What would I be interested in the realm of small caps? And we're going to talk about AI as well and some players in there. And no, not Palantir. So if that's a conversation you'd appreciate, damn it, hit that like button as I take a breath because, whoo, man, this market will get you going. First and foremost here, folks, inflation is still too damn high. Yes, the Fed in the U.S. has paused, but in Canada, they raised rates again because we also have inflation right around 4%. Canada was lagged to getting to the rate hikes that, the U.S. has right now because the U.S. is over 5%. Canada, I still think, is in the 4% level. So we're all kind of balancing in the Western world, still feeling the same kind of inflation and interest rate pressure. And that's leading the Fed to say, hey, guys, we're going to pause here a bit, but it's likely there's going to be 2 more rate hikes, or it's likely to continue to go up until probably the end of this year or 2024. Though I think if they crack the market, they'll start lowering rates, or if inflation gets to 2%. They lied to us. They told us in 2020, guys, that, hey, interest rates are going to stay low for a long time. Take out money, stimulate the economy, and what happened? Boom. They all of a sudden screwed everyone over on a variable rate mortgage, and a lot of people are going to be shitting their pants when the renewals come up in the next year or two, I'll tell you that much. So don't trust the Fed on anything they do or say, and you can tell the market doesn't believe in it. The market doesn't trust it. The market's doing its own thing now. It doesn't trade off interest rate news or friggin' recession fears. No, look at this. Nvidia, a stock that, in my private WhatsApp chat group we were joking about because I'm like, I've always been bearish on this company. I've never understood it. And look where it got me. Got me nowhere. Nvidia's at $430. I was negative on it at 400. I mean, you look at Kathy Wood, you look at everything money, all these people were shorting it and they got clobbered. It just shows you how irrationally insane valuations are in this current market environment. So yeah, I don't even know what to say about that, but the market is cooling a little bit here. We're not seeing the same kind of aggressive rallies that we were, but it's still steadily up to the right. Will that last? I'm not sure. I'm hesitant, but I'm hopeful, and I don't know what to do other than cost average, and I hope to God you're doing the same thing so you're getting some kind of growth out of this market. Look at the Qs here. If you told me the Qs would be pressuring all-time highs, only down 9% at this point, I wouldn't believe you. The Qs are actually more expensive now than they were back here because revenues are in the freaking toilet. Apple's not growing. Google, Facebook, yeah, they got a little bit of growth. Like, I don't even think we're talking single-digit revenue growth here. I mean, it's painful, man. It's painful. I can't make sense of it. So all you can do is cost average. Take the highs, take the lows, and you're going to get some good experience. I think we'll take a breath here. I don't know. Do you think we'll take a breath? I think the market will start pulling back. I mean, the S&P's only 8% off its high. The TSX S&P, for those of you on the Canadian side border, also only 8-9% off its all-time high. This market is unfreaking believable, but you got to be real careful in a market environment like this, folks. You got to be real careful because as things become overhyped, as people stop caring about valuations, you're going to hear idiots like this, Jeremy, financial education. I am kind of blown away that he's letting the people get under his skin that have been making fun of him, including me. Everyone's been getting under his skin to the point where the market pops up a little bit and the dude is gloating on a 6-month chart that he's up 50%. Everybody and their grandmother knows this guy is clobbered. This is his public account. Imagine his private accounts where he lost millions and he's not showing us his entire returns. Because my God, I'm somebody that believes that unless you have 10 years of track record in the market and you can show us a 10-year chart, it's hard to be gloating about anything because it just shows you lack of experience. And I know Jeremy's done well over the last decade, so I wish he'd talk about the long term rather than this frigging 6-month gloat where he's like, oh my God, I'm going to the moon. Everything's so great, guys. Look at all these haters. They're wrong. And you read the comments and people aren't stupid. They figured this out. Like, look, here's one from Richie saying, if your portfolio lost 50% of the value in 2022, but then gains 50% in 2023, you're still down 25% overall. Meanwhile, the market is only down, from 10% from 2021. So you're still underperforming the market. And this is exactly right. Go ahead, Jeremy, and brag about your performance this year. Add up the last couple years, and it's still a big underperformance. It's easy to laugh when you're up in the moment. And I would agree. I think this is just inspiring your audience to be as stupid as you are. They're going to rush into these stocks that you've been buying, like Palantir, a lot of these companies that I honestly think if the market decides to turn because growth just isn't there, and Palantir isn't the craziest growing revenue company. I mean, 17% revenue growth, I think is what they had year over year for the last quarter. I mean, Shopify, I can name a ton of other small software companies that are growing faster than that. I don't know why. Like again, if that anyone that bought the reasonable valuations, I think 5 to 8, not even $9, that's not a terrible spot to cost average. But if we had to toward $20 this year, Jeremy, you know that doesn't make any sense. You know that's illogical. And again, it could go to 50 for all I know. Like I wouldn't have guessed Nvidia going here, but it's gambling. And you, sir, I believe, are a gambling addict. You've lost touch with fundamental reality of investments, and you proved that in last year, the last couple of years. And again, if you're buying hype, if you're buying, say, the wave, and you're playing trends, or you're trend investing, or you're day trading, I'd get it. But that's not what you're doing. You're claiming you're a long-term investor, yet all the companies you own over the last couple of years you don't own anymore. And so your long-term theses don't tend to work out that well because you're highly speculative and you take insane risks. And it's just my humble opinion. Not trying to get anyone up in arms here. I just don't want idiots to run off a cliff like a bunch of lemmings. I was somebody that held a lot of individual stocks, but mostly large caps, did very well. And now I understand the risk. And I'm mostly in index funds to cost average to stop myself from getting too messy up in here with what's going on in the macro environment, because earnings, you can't justify valuations. And if you can't run math on a long-term investment, it screws with your head, and just buying it doesn't always make sense. It just doesn't. So let's talk about AI. Let's talk about things. Would I buy Palantir? No. That's what I'm going to try and steer you away from here and give you a better, a safer investment, though I think this is largely overvalued as well. Doesn't mean it's not going to keep going up. Don't know where those valuations will go, but we talked about it when I bought TSM, and I shouldn't have sold it. I should have held TSM. But again, the revenues on TSM, again, screws with your head because month over month, the revenues are in the toilet. Yet the stock keeps going up. Even Warren Buffett sold it. I didn't sell it because Buffett sold it. I sold it because the revenues changed from when I bought it, and it scared the hell out of me. Whereas you look at this ETF that holds all these semiconductor plays that are taking advantage of all the AI that's going on in the market, this hype, and currently it's almost at all-time highs. And 5 years, it's up 182%. Dramatically outperforming the S&P 500 here. This is an incredible ETF to cost average into if you have a long-term horizon in the market and you're looking to take advantage of the chip growth, because this goes beyond AI. This is all cloud, anything robotics, anything that has to do with self-driving, all this stuff, all these chips. Will eventually these companies will make their way into here. My concern with this ETF is inevitably if Facebook and Amazon and Tesla start manufacturing their own chips, I don't know how you integrate that into this VanEck ETF, which trades under the ticker SMH. And I really want to shout out my viewers for pointing out that this is what I should have been buying, and you were absolutely right. I mean, you take a look at the holdings, it's market cap weighted, which is something first and foremost I love, because that way you get again, I think Nvidia is overvalued, but the fact is the biggest and best performing companies tend to keep running. We saw that with Apple. We're seeing that with Nvidia. It tends to be a story that comes true time and time again. You got Taiwan Semiconductors in here, even though I think it's a better valuated stock compared to Nvidia. ASML, these are all great chip companies, the best of the best globally. So you get some global diversification with this ETF as well. So if you want that AI growth exposure, I think this is probably the way to cost average into it, because you're going to be picking horrible growth stocks that I think are just kind of getting overvalued. Unless you're really good at finding kind of undervalued AI plays, then go for it. But if every one of the grandmothers talking about it, if you didn't learn anything from crypto or SPACs or the insanity of the last couple of years, you're going to be one of those people like Jeremy. Now, just putting that aside, when it comes to the energy market and small caps, we're going to talk about two different energy companies. Firstly, the uranium side with Marriott Uranium Corp. This is not sponsored. This guy did sponsor my channel, but I just want to point out that I've talked to this guy, and I think he's on to something that's incredible. Unlike things that are only comparable to the likes of the Athabascan Basin here in Canada, if you know anything about uranium, which right now is exploding. Uranium looks like it could pressure its decade high here again very soon. And this is an African-focused exploration company right next to the largest uranium basically deposits that I think Global Atomic own, and they even got the operation officer of Global Atomic on their board, which kind of blows my mind. And the licensing they have, again, I'm not going to go into it. You can go watch the video, but I just think for a $9 million market cap company in a time where Africa is having energy crises, and like if you look into anything going on in Africa when it comes to energy, they have an issue they're going to have to resolve. And the fact that they have these crazy valued uranium assets, I think could bode well from an investment standpoint over the next 1 to 5 years, presuming, again, there's risk of drill results, but I have a lot of faith in the CEO of this company. And finally here, guys, so outside of uranium, we also have Aduro Clean Technologies. These two companies have nothing to do with AI. They're largely non-related to any of the explosion in the market. They're very non-correlated, which I like, just like I like the Canadian banks. Like things that aren't exploding because you can't wrap your head around any of the valuation or the hype. So when it comes to like Aduro here, this is a company company that can turn waste plastics into fuels. I think 4 different forms of waste plastics that are, it's much more efficient than any of their competitors. Partnership with Shell. I've talked about this endlessly. There's news coming out this week. I'll probably discuss on Aduro Clean Technologies, trading for 88 cents, $55 million market cap. That should, I would guess, be at the $1 billion level. Their competitor Pure Cycle is a $1 billion market cap company, and their tech isn't even nearly as efficient. So I'm just throwing that out there, that these are highly speculative, way higher speculative investments. But again, as a diversified portfolio, if you're looking to build something intelligently out, unlike the likes of Jeremy, who just, it freaks me out with the way he invests. It gives me anxiety these days. I would focus more or less on putting a lot of money into indexes, pick a 4 or 5 really great ETFs. I still like SCHD for dividend income. Qs are fine. VOO, you can pick the SMH if you're into the AI plays, and cost average for the next 5 or 10 years. That's all you have to do. You don't have to pick them. It's very passive. It takes the stress and the edge off your back. And if you find something you fall in love with, you take maybe 5-10% of your portfolio into the likes of Aduro, Tesla, Marriott. These companies that you're interested in. I'm not telling you to buy what I'm buying. This is not financial advice. It's just where my interest lies, and my pure transparency and honesty to you. So let me know what you think in that comment section below.